Welcome to this week's Financial Market Report by Quiver Financial. I'm Colby McFadden, and it's March 21st, the first day of spring, and we're here to talk about the hot financial topics of this week because it was a noisy week that could definitely get your emotions riled up as the news talked about tariff uncertainty, stagflation because of a revised view of the Federal Reserve on the economy, which sure did sound like stagflation with lower growth and higher inflation. And the most important topic matter for this particular show is what happened in the stock market, because the start of March, it's been a pretty crazy time in the market as we've had a little bit of a flash crash. This week, we got a reprieve because we got something that happened that we've been watching in the charts, which is the market stepped out of that crash channel. So with all that said, let's talk about what we are seeing in the markets and doing for our clients to decide in April whether this has been a dip in the bull market. Like this sell-off in March, was it something that you guys should be looking at with bated breath and saying, I want to buy, or should this be a warning sign for you, especially if you need your retirement funds in the next 5 years? Should this decline be a warning sign to you that, I better readjust my risk because what if? What if we go into a bear market or what if, even worse, you go into a decade like the last decade? We had it from 2000 to 2010, where equity markets made no progress. I'm not saying that's going to happen. However, if you're retired, if you're invested in markets, if you're a prudent investor, that has to be in the back of your mind. So we're going to talk about that, and I'm going to talk about what I'm watching for in April to help me make that decision for our clients on whether we should be leaning into this decline or should we be running away from it. And then I'm really going to talk about why. Why is this baby that you see here? Why is this baby, which happens to be one of my youngest grandchildren, why is this baby ready for bear markets, stagflation, and Trump tariffs? Because that is what everything was talking about this week as the uncertainty around the Trump tariffs are there. And that's not going to go away for a while, folks. So just kind of get used to that. But the big topic that I think is really important is the Federal Reserve held rates steady this week. But more importantly, they revised their outlook for 2025, which sure did sound a lot like stagflation. They said lower growth, higher expenses. The economy is still in a good space, blah, 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 blah. However, they're a little more concerned than they were last month. So something to keep in mind. Doesn't sound all that great, but it doesn't sound horrible. So that's why when you see these macro changes in sentiment of the Federal Reserve shifts from one month to the next, like it has, you definitely have to keep considering that question about equities. The other big thing news this week was tariffs. They continue to consume the headlines. Like I said, that's going to continue for a while. In the midst of that, because of this uncertainty and fear that's going on, gold continues to power higher. Now, what's going to happen next there? I'm going to show you a couple of charts. I think that if you've been in gold, this is a great time to start making a plan of an exit. That's what I'm going to be doing. So I'll talk a little bit about that in a second. If you're new to gold, be careful here because the rally's been going for a while, and I know everybody's going to start talking about it. But the old adage is when everybody else is greedy on any kind of asset, you should be fearful. When you buy low, nobody's talking about it. When you buy high, everybody's talking about it. So just keep all those things in mind, whether we talk about gold or stocks or anything in the future. Big thing I'm going to focus on this week because everybody's focused around equities. This was the first week in quite some time that I got calls from people who were too cool for school in the past saying, oh, I don't need any help. I'm doing so well, that I actually got calls from people that said, you know what? I made a mistake. I leveraged up. I got on margin and, I thought Tesla was going to go to the moon and it went down to the ground. So this week, stocks did claw out of their crash channel. So there's some opportunity there. So it's really interesting that on this particular week that I got more calls from people that wouldn't talk to me 3 months ago asking for help. And it also happens to be the week that the market has clawed out of this crash channel. So I'm going to talk about what to watch more importantly in April, because the next few weeks are going to determine whether this equity market has more Whether this bull market in equities has further to go, or if equity investors should start being looking at other asset classes. So I'm going to just show you exactly what I'm going to be watching for, and if these things develop, what I'll be doing. Normally, like most of you who know who have been watching us for a while, we talk about the 5 markets that really matter, which are things like interest rates, because that has an effect on your real estate prices as well as your stock portfolio. We talk a lot about the strength of currencies, mainly the US dollar against the yen and the euro. This is because currency trends go through long trendy cycles, and they tend to affect global liquidity. And so we talk about that because that can have an effect in the commodity markets like gold, silver, oil. And last but not least, we definitely talk about the stock market because that's the Marsha of the family. If you remember the Brady Bunch, everybody loved Marsha, Marsha, Marsha. Well, in all these assets, the Marsha is the stock market. And just remember, folks, that when you go into a lost decade like we had from 2000 to 2010, and I know there's a lot of people out there that weren't in this business at that time. I was, so I can tell you that in those phases, you better really understand these other asset classes very well, because if you can't make money in stocks, you're going to have to go do it somewhere else. And you better get used to the analysis there as well. So, if you want to know how to make money in a difficult market, please go to our March 7th report, How We Made Money. That first week of March is when the market really, really cratered. I'm going to show you some numbers of what's happened so you can understand that if this is the first time you're watching the show. In that week, we had a great week. And so I shared with everybody what our game plan was to handle a bad market like we've had. So that's a great show to watch. Go and check it out. It gives you some really good ideas on how to match up fundamental with technical analysis. And so it's something that you can use in any asset class in any market. So let's dig into what's happened this month or since January. The S&P 500 has had a nice little correction down about 10%. NASDAQ down a little more than 12%. The big leaders of the market were down in NVIDIA, Tesla down, NVIDIA down 20%, Tesla down 45%. People are lighting these things on fire, keying them. I mean, Elon thought he was trying to do everybody a favor by getting involved in this stuff, and now he's, the most hated man in the world. I don't know if he's a saint or a devil, but I'll tell you, and also note, people, these numbers are of last week. I didn't really update them because nothing happened this week in the stock market to improve these all that much, but they didn't get worse, which is important. Overall, the Mag 7, so the Magnificent 7, the Amazons, Googles, Microsoft, Tesla, Meta, if you were to group them all together, they're down about 25% year to date. That's a big, big change. Everybody in December was telling me, hey, the NASDAQ is up 25% this year. Well, guess what? In a week, it gave back everything it made in a year. So you've got names like Amazon down about 20%, Microsoft down almost 20, Google down 20, Apple down 13. What can you say other than yikes? Yeah, so if you were late to the game, if you weren't watching us in January when we were showing you all the warnings, I'm going to talk about what to watch in this market now. Like if you've endured some pain and you're looking at your 401k, you're looking at your statements, and you're like, oh my gosh, I didn't realize I could lose that much that fast. And you're now thinking, how do you readjust? You really want to pay attention to the next 5 minutes. If you're a Quiver client, you can sit back with your feet up here because I'm going to walk you through what I'm going to do to actually increase our risk if it makes sense. I mean, who can say that after this kind of market decline? Who would want to buy more? But we're in a good spot because I'm going to show you, in addition, what to look for in April, what to do if stagflation is in front of us. I'm going to show you a game plan here on stagflation and how to handle it. So in the equity market, just to go backwards for a little while, and I can show you here. I think my picture might be blocking it, but this chart I'm showing you is as of December 1st. I'm sorry. December 31st of last year of 2024. And I've been using this as an example, showing you that from the Great Recession, from 08 to now, that the overall stock market has a very defined, impulsive five-wave move. If you're an Elliott wave or a wave theory type of person, then you know that at the end of the fifth wave, you should be expecting a correction, a bear market. There's different degrees of this, and that's really the trick, is figuring out, is it a short-term, intermediate term, long-term type of situation? Nonetheless, when you zoom out big like this and you see that the market is this developed, if you're entering into it as a new player, you need to be careful. If you've been in this market for a while, this is the time you should start to ask yourself, do I take profits? Where do I take them? Do I need to take them? How soon do I need the money, etc.? If you're 5 years away from retirement, if you're 5 years away from needing this money for healthcare or anything else, then you really need to be careful of how you manage this market, because when all the small guys are in, and we showed this to you last about 3 weeks ago, when all the small investors are in, history has shown that, all the retail people, the momentum gets going and they feel like they're missing out, and everybody who thinks they're buying low is buying high, and they don't know it until it rolls over. So everybody's in this market. So you just got to realize that the Trump bump that happened after the election has turned into a slump. And last week we said the first order of business for this market to give anybody some hope is we needed to get out of this crash channel that I drew here in the red lines. I lost my mouse. There it is. And this crash channel, I was hoping it would happen somewhere here around 5,600 on the S&P 500. A lot of different reasons. The 200-day moving average isn't too far away. There's some different levels of support from both horizontal and diagonal. So I was really hoping we'd see some footing around 5,600, and we got that this week. So here's an updated chart. So this is as of the end of this week. You can see that we came out of that crash channel. And now what's really going to matter in April, so that what we really need to watch, is what happens between that green line, basically right under 5,600, and the red line at 5,800. So the fighting ground, like if this was World War II, the trenches are built basically between 5,500 and 5,800. Germans on one side, Americans on the other. Here we go, people. These are now the lines in the market here. So what I want to see is how this bounce, if this bounce that started this week develops in that range. And what I'm going to be watching for, I'm going to change the chart so that way it cleans up a little bit. I'm going to be watching how, what happens to this market if we can bounce high enough to what used to be support. So this line at 5,800 was a level of support. And the rule is that when you break support, it now becomes resistance. So what I want to see is, what if we get a bounce up into that 5,800, what happens? Does the market get rejected wham right away? Does it kind of just bounce around there, and can it get above it? Because my experience has been that if you have a decline like we do here that started at 6,100 in the S&P and ended somewhere around, let's call it 5,500, right? So you've got about a 600 point down move. What I've found is that on the bounce, once you've bounced more than 50% of that, so call it 300 points, so that would bring us right to 5,800. Amazing how these things work this way. So if we bounce much higher above 5,800, then we've recovered more than half of the decline. And not always, but my experience is in bull markets, once you've recovered half the decline, you're probably going to recover it all and go retest the all-time highs. So that's why that 5,800 line for me is like a trench in the sand, or on D-Day, whatever you want to call it, right? That is a really important line for me to watch. And the other is that previous low, because what can happen here is that this particular moment, the decline in the S&P 500 is really just three waves. You can kind of go 1, 2, 3. 3 waves is a corrective pattern. If we continue higher from here, this was a correction in a bull market, and we continue higher. That's basically as simplified as I can make it. However, if next week we get into Monday, Tuesday, Wednesday of next week, this market goes lower and we break these previous lows, call it around 55.50, right? So if we get much below 5,600 next week, then this actually turns from 3 waves into 5 waves. And that's an impulsive move. And I know I'm kind of boring some of you here, but it's important because if it's an impulsive move, then what I'm going to be watching for is on the next bounce, I'm going to start to lighten up any risks that I have in the Mag 7, any risks that I have really in the highly sensitive areas of the equity market, mostly technology. Okay. So that's what I'm watching for. If this current bounce develops, we get above 5,800, and this is just simply a corrective pattern, I'm not going to worry too much. Everything in the portfolio that we have is going to do perfectly fine. However, if we make one more new low in the next handful of days on the next rally, I'm going to really be watching this for a way for me to lighten up on some of the stuff I just recently bought, thinking that this was a correction. Like right now, I'm operating in the mode that this is a correction in a bull market. However, I'm keeping my eyes open for something different. And so I did buy some stuff on the lows recently. And so now that will be my decision making is over the next week, how this develops will tell me, do I hold what I've recently bought or do I need to move it back to safety? So that's how this works. It is watching this day by day, week by week. Now let's shift and go from the stock market, okay? Because I just gave you the game plan. I can't make it much simpler than that. If you need more detail, call me. If you're trying to do this for yourself, if you're a home gamer and you're trying to do this for yourself, call me. I'll walk you through the steps. I'm happy to do it for free. I'm not going to ask for anything in return. I just want you to be safe more than anything else. So let's talk about some of the areas because I want to talk about other than equities because great, Marsh is in the house, but you know what? There's Jan and there's all the other kids in the house that should get some attention too. So if this were the Brady Bunch, if the stock market was the Brady Bunch, I want to start talking about some of the other kids in the family because you don't have to have all your money invested in the stock market. There's plenty of other places you guys can go. So one that we know has done very well this year has been gold. And if you're looking for a game plan around stagflation, this is it. So if you're wondering to yourself, man, if we go into stagflation, what should I do? I'm going to tell you right here how you handle it because there's only a handful of asset classes that you can tend to go to during times of stagflation that have a fighting chance. And that's a fighting chance, folks. That doesn't mean they're going to make you a fortune. It just means they're going to fight better than the other things. One of which is gold. And you can see that over the last year, gold's done quite well. So that's why I said in the intro that for me, what I'm watching here over the next month of April is what happens in GLD. Does it pull back down all the way down to 270, a nice little couple percentage point corrections, and then move higher? Or did we just fill this little gap here and next week, boom, it explodes higher? If next week gold explodes higher in kind of a parabolic move, it's nothing I would chase myself. We've been in gold and silver and metals and miners for a while. So if we do get that explosion higher, I'm probably going to use it as a way to take profits. Even if we were to dip down to 270 and explode higher from there, if that were to happen. Now realize there's a lot of wiggle room in this chart. This gold could correct all the way back down to 260. So if you're a new buyer at 280 and this thing drops to 260, yeah, it's going to scare the shit out of you, folks. So if you're new to gold, be careful because it could drop all the way down there and still be long-term bullish, right? So that's the flip side of the coin. I think something more mundane happens here where the correction that we've had in gold over the last couple of days stays pretty shallow and then we go off to the races. So that's why I'm looking at this as more of, hey, do I start to take profits? So that's what I'm watching in gold, and that's something that should keep everybody's eyes on the playbook there. The other area that's done incredibly well, and if you look out, and you guys can Google this, it's not that hard. You can go to a million other places and Google out, what sectors do best during stagflation, right? And everything I'm going to show you here is probably going to come up. These are things I've been talking about for probably 6 months now. And if you look at the Quiver portfolios, you're going to see a lot of these holdings in there, and you'll see they've been there for a while. One, consumer staples. So what are consumer staples? They're the Procter and Gambles. It's the stuff you can't live with, and it's a defensive area of the market. So what I'm going to be watching for here is if the market continues to bounce, does a sector like consumer staples that's performed quite well this year since the start of January, where's my mouse? Since the start of January, which is right here, it's been one of the best sectors. So I'm going to see here this little correction that's happened over the last few weeks. Does it get its footing very soon here and go make another run higher? Because this would be five waves or another impulsive move. That'd be really, really interesting to watch. And it starts to look like other sectors of the market are taking leadership away from things like technology, the common rotation. Another area that's on our radar is utilities. Again, one that's performed fairly well since the beginning of January, much better than technology has, pays great dividends, and happens to be one of those areas that if you're a technology lover, you should probably have utilities in your portfolio too. Like in this world of technology, and you see how much energy that it takes. I can't think to myself, if you love Nvidia, then why wouldn't you like other things that feed Nvidia, like the utilities? So what I'm going to watch for in April is to something like XLU, which is a utility sector fund. Can it get above that red dotted line of resistance right around $80? And by the looks of some of the holdings in it, like Duke Energy and Exelon, which are also some holdings we have in the portfolio, considering that those particular holdings are breaking above their resistance levels and they happen to be holdings within this fund, I have a sneaky suspicion that that we're going to get eventually at some point here, we're going to get above that 80. If it doesn't happen soon, it'll happen later. But I think utilities should be something that's on people's radars if they're trying to find an opportunity in this current sell-off. Another one that's really we've been talking about for quite some time is the energy sector. And when you look at it in that green circle that I gave you, which is basically from January to now, you have something that's ran from 84 to 94. That's not a bad run. It's about, call it 7% in a marketplace that I showed you earlier. The S&P is down 10 and the energy sector is up 7, and nobody's really talked about it. So what I'm going to watch for there in April is, can it get above 94, the XLE, which is that you can see where that level of 94 over the last year has been an area where it's kind of hit and hit and hit and gets rejected. But the thing about resistance is you got to view it like a glass ceiling, or like if you were underwater and there was ice above you and you're poking something. Each time that you hit that ceiling, it's going to weaken and weaken and weaken. Eventually, this market's going to pop through there, and when it does, that resistance becomes a new long-term support. So that's why I'm going to watch for that in April, because it'll give us some confidence within some of the holdings that we have in the Quiver portfolios. So I think that should be on everybody's radar. And then the other thing is, look at aerospace and defense. Now, when you look at this chart of aerospace and defense, you really can't help but to think to yourself that somebody is gearing up to kick some ass in the world. I mean, this is, this is something to keep on your radar. Last week there's been a lot of conversation about should you be in the U.S. or Europe now as far as investing, especially that now that Europe might have to flip the bill for Ukraine. Either way, I think the U.S. manufacturers of aerospace and defense are the winners of this, because they have the product that everybody needs. And there's a few Europeans that do something similar, but these guys still have all their patents and all their knowledge and everything else. You can't go to war without them. So the aerospace and defense is something that is to keep on your mind. And just because, don't be too surprised if over the next 3 months the news cycle gets a little weird, right? Because tensions are getting high. So I'm very concerned for anybody in politics at a high level, especially a guy like Trump or JD Vance or anybody else, because tensions are going to get high. And even a guy like Elon Musk, they're not safe at this point. There's a lot of things that can go wrong in the next couple months. So I definitely think aerospace and defense is something to keep on your radar. As it's like for me, it's like a news event insurance policy is what I'm thinking to myself. So, what else do we have? Well, that's about it. Those are the sectors that I'd like. If we go into stagflation, those are the things that I'm going to keep on my radar: aerospace and defense, utilities, consumer staples, the metals, all the things that have been working already. Those are the things that should do well during a stagflation period of time. Now, realize because of where we are in the cycles of things, this whole environment could totally change and it could become a lot worse than you think and or a lot better than you imagine. That's just the world we're in. We've seen that when we went into the pandemic, everybody got panicky and then we came out of it and things got a lot better than you would imagine after being a lot worse than we ever thought it could get. So that's for sure. We know that can happen from life that we've seen over the last few years. So the next few weeks is going to really be a determining factor for a lot of us as longer term investors on whether this has been whether we're going into a bear market or if this recent correction was a buying opportunity. Like I said before, I'm treating it like a buying opportunity. However, I encourage everybody to make sure and go back and look at last week's market report, which we talked about how we made money in a tough week because it walks through all the fundamentals and technicals, as well as just a couple of sensible tactics to use in a portfolio. Next week, I'm going to update you on all the 5 market trends. It's been a few weeks since I've done that. So next week, we're going to talk about gold. We're going to talk about energy. We're going to talk about oil, currencies. We're going to go through the whole gambit since it's a new month. And until then, folks, enjoy the start of spring. It looks like we, at least on the left coast, over in West Coast here, we got some great weather coming. So get out there and enjoy it. And until next time, take care.